Okay, so what I want to do in this video is talk about some of the developments that have taken place since my previous video. The dev has pushed a lot of website changes, and those are in beta. So currently they are not working perfectly. But maybe by the time this video is released, they'll be working just fine. They were working fine earlier today. He's probably just doing some back end things. But these, oh, look, in real time pushed that data through. That's pretty interesting. All right. So, yeah, okay. Wow, that's a lot of information. Holy fucking shit. Uh, what the fuck? Okay, so seriously, this dev is fucking crazy, man. What the fuck is he doing? He has so much attention to detail. Because it's kind of needed. There's so much back end stuff. There's so much data that goes in to what's happening with this blockchain that you really do want to have that show don't tell ethos, like he mentioned in Discord. Um, it's not about marketing and pushing the product. It's about having the product work well and then people just using word of mouth and just looking at the data and understanding, hey, this product actually is pretty useful. And you can just back that up by the data that's collected every 2 minutes from each block. So look at all these different features that the dev came up with in less than 2 weeks. All of these different features you can add to this chart, you can customize it, and then you can even share the chart through this JSON. And super interesting. I'm not going to get into it right now. And then, yep, here's the conversions. It still doesn't seem to be working perfectly. Up and there goes a lot of the data. So, I mean, the dev is still working on this, but again, very useful to monitor the state of when people are minting the stablecoin or when they're unminting it. Or when they're doing any of the other things that can be done in this protocol. It can all be observed. And of course, it's all private and untraceable, so you don't know who's doing what, but you can still see when things happen, and that's always been the case. It's just now that the dev has made it more accessible in terms of what you can see on the website. So all of this is new. This is all brand new. You can take a look. It's zephyrprotocol.com. And this is actually really interesting. This competition stats is really kind of ingenious. The dev came up with this on his own. And it's a little complicated, but it's actually extremely useful. So let's imagine that zero means it's pretty balanced. So maybe like half of the people who mint ZSD want to earn APY, and so they stake that into the APY pool. But if everybody who mints ZSD wants to get APY, then there's more competition. But if lots of people mint ZSD, but they don't want APY on it, then there's low competition. That's actually where we are right now. People don't want to get APY on their ZSD because they just want to own ZEPH right now because the market cap is like 12 million or something. It's extremely low. It's going to $1 billion or more, in my opinion. We will kind of talk about how I get to that number. But right now, there's very low competition for the APY, so it is pretty high. It's 37% right now. And in the last 3 months, it's been 28% on average. It hit a max of 52% and a minimum of 16%. Its all-time high was 192%, and its average over the entire year that it's existed is 40%. That's really good. 40% for a stablecoin is phenomenal. For a full year, it was able to maintain that average. That's exceptional. So right now there's very low competition, and you can take a look at where that competition has been over time. And this website talks a lot about how you can go ahead and mint and get APY. And over time you can track all of this information. Again, this is in beta, so sometimes there are some load issues. So we'll just jump to the bridge. So again, the bridge was created in a matter of weeks. And we have a roadmap here, which is new since my last video. You can see what's up and coming, what we can currently test, what we've already been testing. You should definitely be, getting on this test net and, playing with the bridge and seeing for yourself how it works. If you're interested in Zephyr, I really recommend that you do take a look at this, because then you'll get a better sense of how it's going to revolutionize the DeFi ecosystem. And so let's take a quick look at this today. I've actually gone ahead and tested all of the features. I'm not going to do that here today. The main thing you kind of want to know is that if you have a wallet and you've got some real ZEPH in that wallet, you can actually point it at the testnet, and then you'll have testnet coins automatically. Because let's say I had 10 ZEPH in my wallet, real ZEPH, I could then point that wallet at the testnet, and I will automatically have 10 testnet tokens. And those I can then wrap, and I can send it all the way to Ethereum from my Zephyr wallet, and then they will be wrapped. And then I can swap them for USDT or USDC. I can go ahead and swap them for like wrap Zeph and or wrap ZSD or whatever. So that really does kind of prove that the bridge is working. So in this kind of like this focus, this is actually pretty interesting. When the dev first came out with the bridge, it was a little bit more simplistic, but this really kind of illustrates how kind of thoughtful and creative and intuitive the dev is in terms of how he's thinking about the user and how the user kind of goes through this process. So in terms of the EVM, kind of just focusing on the swaps and the LPs, this is more about just kind of getting your EVM wallet and using the faucet, and then you just automatically get Zeph. And so that's if you want to test out the swaps, and if you want to test out like the liquidity pool, and you want to go ahead and manage that pool. I think I do have, let's see if I got any fees so far. Oh, looks like I'm tracking some. I don't have any fees from what I can tell here. Can I collect them? Let's see. I'm gonna have to type in a password. Let's just skip this for now. It looks like I have, maybe I do have some fees, but it's not more than one. Okay, so just going back now again, if you just want to test out the swaps and the LPs, you can go this route. But if you really want to understand like how this is going to work, you really want to go ahead and just connect your wallet to the testnet. Of course, you have to be very careful, because whenever you send coins, you have to make sure that you're on testnet, because you don't want to send your real coins over, because then you'll lose them. But you can, if you know what you're doing, you can follow the instructions here, and it's pretty simple. I was able to do it with relative ease, and of course, there's more of like an advanced mode and everything. But if you don't really know what you're doing, I would just recommend you go ahead and use the faucet here. But again, I did test the actual wallet out, and you're sending real Zeph from the native wallet to Ethereum, and they're getting wrapped just fine. And you can go ahead and test out this wrapping, and you can see that I went ahead and I have wrapped, and I've also unwrapped and got them sent back to my wallet. And of course, when I get them back into my native wallet, I can go ahead and swap them, and everything's working fine. So I'm able to wrap and unwrap. And this is really big, because part of my hypothesis is that when Zeph is part of the DeFi ecosystem, it's just going to pull in a lot of liquidity, because people want stablecoin yield. That's one of the biggest parts of crypto, is the ability to earn money on a stablecoin. And Zeph right now actually has the best APY on a stablecoin. That's probably very difficult to believe, and I wouldn't blame you for like being like, no, that's probably bullshit. But I would encourage you, if you did think it was bullshit, to just wait and be patient and like hear out the facts, and then see for yourself if it is bullshit or not, as opposed to just saying, okay, that's bullshit, I'm not even going to look into it. I recommend that you go ahead and take a look at the facts, and then see if it actually is bullshit or not, because I've done the research, and I know that it is the best APY in all of DeFi on a stablecoin. And so as soon as it does get bridged to Ethereum, other people will recognize that the yield is real, and then they will actually try to get some of that yield. And in an effort to get it, they will actually push the market cap of Zeph higher. And then they will essentially kind of create this flywheel effect where as the market cap goes higher, more people can actually join in on the APY, and it's all sustainable. And there's a whole kind of mathematical model behind this. I've already talked about this in a previous video. I'm not going to get into that right now. But this bridge is working perfectly. And so, as soon as it goes mainnet, expect the ZEPH market cap to, really kind of grow exponentially. We're actually going to talk about some of the numbers today. But right before we get into that, I'll just kind of show you some other features. You can, see all the circulating supply. And actually, there's a question on Discord about like how you lose privacy when you go to Ethereum. So we'll talk about that a little later in the video. But it is true that when you go ahead and wrap any of your Zephyr coins, whether it's the ZSD or the ZEPH or the ZRS or ZYS, right? There's 4 different coins. If you wrap them, you do lose a lot of that privacy because let's say I have a MetaMask wallet, then that wallet is linked to all of my transactions, and people can kind of see if I'm not like creating new wallets, they'll be able to see all of my transactions. And so it's not private anymore. And of course, when I unwrap, everything becomes private. But if I, let's say, unwrap, let's say maybe 10,000 ZEPH or something like that, then someone knows that that wallet had access to 10,000 ZEPH. And if I send that, back, right, they can kind of monitor that. So you do lose some amount of privacy, but in a way that's also a good thing because you can kind of opt into privacy. If you know what you're doing, you really can be private by going to the native wallet. And there's a lot of details about that. I'm not going to get into that in this video, but the benefit of having more transparency is you can see what the circulating supply of wrapped ZEPH is. So that way you have no questions about there being an infinite amount of ZEPH that was exploited and created, right? There's a little bit of a concern around that. So, it puts that to rest. You'll be able to know exactly how much wrapped versions there are. And you can, look at the data from the native dashboard here, and I'll go ahead and hit refresh, and we'll see if we can get this to load up. Right. Okay. So yeah, so we would go to statistics here on the network page, and then you can see how much ZEPH is in the reserve and what the circulating is, and you can just do some math. If let's say 5 million are wrapped on ETH, and then you can assume 5 million are not wrapped, and you can monitor all of this because this is all on the dashboard here. And since my previous videos, like ZEPH has 2x from this low here, or it went from 88 cents to $1.60 something. And I think there is a lot of demand, and I think that demand's going to grow and grow. Honestly, I think we're going to see this go way higher and quite fast. And we're going to get into some of my reasoning in just a moment. Okay, so bear with me. I don't have a script. I'm literally just talking off the top of my head here. But one of the main things I really want to talk about in this video is what happens with the price of ZEPH in the future with regards to the stablecoin being minted. So, that's a little bit confusing. So let me just kind of back up and show you what the current crypto landscape looks like. So, on October 10th, there was an exploit on the USDE, which is the EthenaFi stablecoin. Peg. So basically somebody had a lot of this dollar and they sold it into a pool which depegged the price, and then anything that was pegged or anything that was paired with that coin. So let's say you had Solana. So this was on Binance, so it was a Binance wrapped version of Solana, or Ethereum, or Binance wrapped version of Ethereum and Bitcoin and so on. They were all paired with USDE. So when USDE lost its peg by 40% down to 60 cents or something like that, then I guess those other coins went down in value because of how that pair works. And so then there was liquidations that took place, and then those liquidation cascades took place, and then the whole kind of crypto landscape went through this huge liquidation phase. And the market makers, they also removed all of their market making because they didn't want to get screwed over. And so you had this huge liquidation across the board. And that's because this depegged. And if you look, there's 12 billion of these dollars minted. And that's down just a little bit if we go to the market cap because of what happened on October 10th. Quite a bit of that went down, but right now it's about $12.5 billion worth has been minted. And that's just the stable dollars that are in circulation. Like if you look at USDC, there's 76 billion of those, and then USDT, there's 181 billion of those. And if you look at the market cap of Athena, the actual token underneath that protocol, it's only 2.8 billion, and the ticker symbol is ENA if you're curious. And so this is probably one of the competitors, I would say, to Zephyr. If we take a look here at some of my assumptions, it will make more sense about what the future of Zeph will be in terms of its price and how we kind of get to that valuation. You might think that $5,000 per Zeph is extremely unlikely. And you might be right about that, but I don't think there's a zero chance that it goes to 5,000. In fact, it could actually go to $15,000 if you model it out. So, how do we even get to $5,000? So let's say in the future, 5 years from now, the circulating supply of Zeph is 17 million, right? So this is about 6 years from now or so. Let's say there's 17 million Zeph in circulation in about 6 years. And let's also say that 10 million of those will be locked in the reserve, which back and allow the minting of the stablecoin. And right now there's actually 3 million out of 10 million. So the current circulating supply is 10 million or so, 10.5. And the amount of those inside of the reserve backing the ZSD is 3 million. So as adoption takes place, we would expect the reserve to actually grow. And of course, the circulating supply is growing. So if the price of Zeph was $5,000 times the number of coins in the reserve, you would have $50 billion in the reserve, and you have to have 400% collateral for every $1 of ZSD. So that means I have to multiply 50 billion by 0.25, which means that for every $1 of ZSD, I have $4 of Zeph backing it, and that's exactly what this calculation is showing us. Also, if each Zeph is worth $5,000 and we multiply that by 17 million circulating supply, then the market cap would be $85 billion. Now, keep in mind, $85 billion is a lot. Of course, it's a lot of money. But if you look at some of these projects here, it's not completely unreasonable to think that maybe in the future, Zeph could be worth that much, right? I mean, Dogecoin, which does nothing, is 28 billion, and it literally just does nothing. I guess it's like a form of currency, you could think of it. But I don't think it has any real value outside of like speculation ultimately. And so, Bitcoin is 2 trillion, Ethereum is 470 billion. And these are going to 10x from here probably over the next 10 years, or maybe even more. So it's not impossible for Zeph to get to this valuation, but it does seem pretty unlikely at this point in time, just when you think about the total landscape. But I'm not trying to say that it's going to be worth 85 billion. I'm only just trying to explain how Zeph could make exactly the same amount of dollars as EthenaFi. Right? So again, EthenaFi has $12.5 billion of their USD. Their market cap is 2.8 billion, right? We just saw that. So it actually is pretty capital efficient. The market cap is only 2.8, and they're able to make 12.5 stable coins. Now, Zeph is actually not capital efficient because it requires $85 billion to make $12.5 billion. So it's quite a bit different from EthenaFi. And that's actually one of the main arguments about why DGED is not a great protocol, because it actually isn't capital efficient. And the question kind of becomes, will capital inefficiency matter? And my response really is no, not in crypto because of degens and simply supply and demand characteristics. So like in your typical capital markets, like on Wall Street or in private capital or venture capital, they want their capital to go a long way. They want to be able to have $1 and make $10 with it, right? Or be able to mint $10 of stablecoins with that $1. So they want to be as efficient as possible. But in crypto, that incentive is quite a bit different because really everybody just wants to make money. And with ZEPH, you can actually make a lot of money and support the stablecoin that's getting minted while doing that simply by holding ZEPH. And it's my opinion that if there's demand for ZEPH because people believe that the APY is valuable and that people will go after that APY, then in order to get that APY, they need to buy ZEPH, and then that will push ZEPH higher, and then the APY will be able to sustain the number of people that go into the ZYS pool. If this doesn't make sense to you, you should watch my other videos about that. But essentially, my main argument here is the capital inefficiency of ZEPH actually is not going to matter. That is probably one of the main arguments for why ZEPH is problematic. And again, I don't think that's a problem at all. I think that because ZEPH market cap can go higher and higher, people will just want to buy ZEPH as a result, and then they'll end up being able to make money off of it while supporting the entire ability to mint 12.5 billion ZSD. So at some point in the future, there could be 12 billion ZSD minted, but the only way that that could possibly happen is if ZEPH market cap was 85 billion. And 85 billion from today is like 100,000 X from now or something like that. I have no idea. But it's a lot. And so, it's $5,000. And the current price is like a buck something. So if you wanted to 5,000x, I guess is the correct calculation, ZEPH would probably be a good investment if you thought that this was going to happen. I I I I'm not sure it goes to 5,000, but honestly, I don't think 1,000 would be off the table. I think like 2,000 is kind of reasonable, actually. And yeah, that sounds pretty insane. But stable coins really are the future, especially when you look at like how the US needs to debase their debt through T-bills. It's kind of a whole thing. I don't want to get into it, but stable coins are basically like the future of fixing the debt problem. And because stable coins are not created by governments, they're created by companies, usually centralized ones. It actually works really well for the government because people can kind of trust that a little bit more. And the best part is that ZEPH is decentralized, so there's no central authority. It's private and untraceable, so that's also a benefit. And it's going to take a share of the stablecoin market no matter what. Like that's just a fact. It already has taken a small share and it's going to take probably a larger share, but it's probably going to be a very small share of the total market cap. We'll kind of talk about that in a little bit, but because ZEPH is going to take a share, it's going to definitely go up in value and much more than it currently is. And just for reference, USDT, there's $180 billion worth. And I think, I haven't really double checked this, but I think I saw this somewhere, that 550 billion is what they are valuing the company. It's a private company, it's not public, so there's no like stock that you can buy, but there's of course private stock equity, and it's being valued at 550 billion. So even in these kind of companies, there's still some capital inefficiency just because that's kind of how these things work. But not nearly as inefficient as Zephyr. But of course, it's inefficient because it's decentralized and because it's over-collateralized. And that over-collateralization helps to keep the protocol from depegging and keeping it robust and keeping it decentralized all at the same time. So that's kind of the trade-off, obviously, is like if you value having money that nobody can freeze, and that's truly fungible, then you would be interested in this protocol. So yeah, I think there's a lot of reason why Zeph is going to go up in market cap. So just continuing here, Zephyr Protocol actually works, and it will make a small percentage of the stablecoin total addressable market. So I was literally just saying that basically it works. It's never depegged. None of the DGED protocols have ever depegged. There's previous ones built prior to Zeph, and none of them have ever depegged. So you can look at that. It works perfectly fine. It is going to take some of the total addressable market. So stable coins are needed. We need to mint more over the next 10 years. It's going to go up and up and up. And so Zeph is going to take some of that share naturally. It's decentralized. Nobody can freeze my assets. It's untraceable, meaning it's fungible. I can trade it with someone and they will take it from me. It will be fungible. If you don't know what that means, you should just go look it up. Also, it earns yield, and not just any yield. It earns the best yield. If you think that's not true, then you need to do more research. This alone should be enough to convince you to buy Zeph, because as soon as it goes to Ethereum, it's going to suck in a lot of capital, like I've said, because people want that yield. And in order to get it, the Zeph market cap has to go higher. And when people realize that the yield is real and sustainable, then they will start to throw a little bit of money at it. And then when more TVL happens and more of the Zeph is locked in the reserve, trust will build. The dev is building out a lot of those charts and data sheets where you can kind of see all the information. People will trust it more. They'll see more TVL is being thrown at it. They'll see the APY is being maintained and sustained. And then more and more money will be thrown at it, pushing the market cap even higher. And, people want stable coins with yield. That's what they want. If eventually people are able to mint 12 billion of ZSD, then the market cap has to be 85 billion to support that. Now, I don't think 12 billion ZSD is going to be minted anytime soon. I think it'll be much slower because it's a different way than like AthenaFi and USDT. The way that they do that is much different. I'm not going to get into the details, but because of the way that Zeph works, it's probably just going to be slower. But even if we got 500 million ZSD minted, you could do the math on this, but the market cap of Zeph has to be above that by about 10x or so. Like you could just do the math on this. It's, I think, about 7x or something like that. So 12.5 times, what is this, like, I guess 6 or something like that, brings us to 85. So, you need to have 6x capital. And if I have 500 million times 6 is 3 billion. So the market cap would be 3 billion to mint 500 million. I don't know. I'm doing the math on the top of my head here. But the main point here is that I do believe a large amount of Zeph stable dollars, ZSD, is going to be minted. And that will ultimately only happen if the market cap is higher. That's why I'm buying a lot of Zeph. And, I've allocated a lot of money to this, and I'm allocating more. I think that $1.20, which is like the current price, is actually really low. I think that Zeph is going to go to $500, and I think it will probably go to $2,000 or more, actually. But if you guys disagree with me, please let me know why. I'd be curious to hear what other people's thoughts are. Okay, so Zeph is innovating unlike anyone in DeFi. So I've already talked about this. 68% APY in a stablecoin in 1 year via non-traditional yield from block emissions. I mean, this is absolutely insane. The first year it existed, it got 68%, and it's not getting it from traditional yield. And that's actually really big because it can, on top of the 68%, actually get traditional yield. So it says here, once bridged to ETH, it will have even more APY due to DeFi yield techniques. So we can kind of employ some of those other techniques that DeFi uses to boost that APY even more. YZSD is a more intuitive dividend on a stablecoin innovation. So basically what I'm trying to say here is YZSD is going to be created by the dev, probably not for several months from now. It's kind of like down the road on the roadmap. But this is actually a really good idea because basically you just hold a stable coin called YZSD, and then once a week you'll get paid out a dividend. And it's different from WZYS, which we've talked about in a previous video, which you hold, and then it's not very intuitive. People always ask like, oh, I don't see my value going higher. I can't see, where I'm getting this value. And of course it's there. You're getting the value all the time. Your coin never goes down in value. When you swap it out, you get that value. But through swapping, it's kind of like, then you have to, lock those gains in. It's a little confusing and maybe, not the best way to kind of grow the ecosystem. So it was actually really kind of ingenious to think through this idea of, well, why don't we just have people hold this yield kind of share, and then they'll get paid out automatically through this kind of smart contract. And so again, this really kind of shows how the dev is like super invested in making sure that Zephyr protocol is expanding and growing and adopted by the larger community. And the level of detail that he is able to illustrate, I think really shows that this project it has staying power. And it builds confidence, right? So you should take a look at the website and see all of the details. In just the last couple of weeks, the dev has really done a lot of work. And again, it really kind of shows that this is a project that is not simply fluff. It's actually building a product, and it's not even, going out and marketing really all that much. It's just building and building and building. And soon adoption is going to take place. And, ZEPH is really probably the most asymmetric play that you could possibly get in all of crypto right now. I know that sounds absolutely bizarre, but it's really my hypothesis. Yeah, so I've actually just been talking about this. The dev has been professional and hardworking. We have a working testnet bridge in less than a month. Mainnet could be any week now. There's a new ZYS calculator to help to determine how much APY you can expect. Again, those are in beta, but I've tested them out. They're really, really interesting. There's tons of details. You can play with them. The competition stats, I think, are very, very interesting. That's also pretty ingenious for the dev to kind of even just come up with that idea and then to code it, I think, just really shows the level of intellect and motivation for educating people about what they can expect for ZEPH in the future. If I have $100,000 and I think, oh, well, if I buy $100,000 worth of ZEPH and then I want to, mint ZSD, and then I want to add that to the ZYS pool, you might not know exactly how much your yield will be. But the dev said, you know what, fuck it, I'm just going to make a calculator. And, right now it's having some load issues. It is in beta. But just the other day, it was working perfectly, and I was able to test everything. I can't show you right now because it doesn't seem to be working great. But it was working well, and I can tell you that it was showing to me that this project is serious, and I was able to actually estimate exactly what my APY would be when I go ahead and add to ZYS. And so that's really what everybody kind of wants to know is like, if I buy ZEPH, what actually will the APY be? And that is updating every 2 minutes from every block. So it's actually pretty great to have. Then, of course, like I said, there's data and charts that reinforce the show don't tell ethos. He's really just kind of building out the product. The data's there. We don't really even have to say anything. I don't even have to make videos. In time, ZEPH is just going to show itself to the world, and then it will just naturally be adopted by the world because it has a good product market fit. I mean, that's really the main thing is the market has a need. Zephyr has the solution, and when it bridges over to Ethereum, that product market fit is going to be really ideal, in my opinion, and it's going to push the market cap higher. It's got a grassroots marketing, no paid marketing, no KOLs. There's just an X account and YouTube videos. Of course, there's the website, which has a lot of videos and blogs and things like that. In the future, they have talked about partnerships, new centralized exchange listings, potentially talking with some KOLs. And like I said previously, the bridge is real. It's working. You should test it out for yourself. and kind of help and see if you can find any bugs or anything like that. But you can send over your actual Zeph and wrap it on the testnet and play around with it. So that's perfect. And then game theory. So this is another really important thing that I think like nobody's really thinking about because it's pretty complicated. But the native wallet has absolutely no slippage, making it easy to exit to Ethereum without pushing Zeph price down. So let's say you bought like 50,000 Zeph or something like that, and Zeph goes to $100, which is my base case. Then those 50,000 would be worth like 5 million or something like that. And then I want to sell those 5 million. Now, normally you have this problem with exit liquidity. So this is a huge thing in crypto. Every fucking altcoin is always like, oh, I'm going to buy this altcoin, but eventually I have to sell it to get out. And so everybody is eventually having to exit a protocol, and then somebody is exit liquidity. So the whole narrative in crypto is, oh, well, who's going to be exit liquidity? But Zeph is so innovative that now there is no need for exit liquidity. I mean, like if there's anything you fucking remember from this video is that exit liquidity is obsolete because there's no slippage in the native wallet. You can just swap all of your Zeph to ZSD, have absolutely no slippage. There is a fee, of course. The fee is negligible. And then you take your ZSD and you wrap it, you move it over to Ethereum, and then you just swap your Ethereum. Then you just swap your wrap ZSD to USDT, and then you can if you want to have ZSDT for whatever reason because you're an idiot and you don't realize that Zeph is just going to go higher and higher, then yeah, you can take your stupid USDT and do whatever the fuck you want with it, right? I wouldn't recommend that, but you could do it if you're relatively smart. If you're stupid, like most people, you'll just sell your Zeph on a centralized exchange, and then you push the price down, and somebody will be your exit liquidity. But guess what? Because Zeph has made it obsolete, they're not your exit liquidity. You're just an idiot. They're buying Zeph, which is going to go higher and higher because people will catch on that there's no slippage in the wallet. They can move it over to Ethereum, and then they can exit without pushing the price down. Then they have a bunch of USDT. I mean, imagine what you could do with that. You could just buy more Zeph if you wanted to. Probably not the best idea, though, because you'd get less Zeph, of course. And really, I think the whole point is to just get more Zeph, ultimately. And yeah, I mean, I think at some point you probably want to own ZSD or USDT. I think that would be fine too. Like, I have nothing against that. Because it's more fungible in some ways because there's more pairs, you can swap it with more things, and you could probably buy things with USDT in the future sooner than you can buy things with ZSD. But if things work out well, then ZSD can be used all over the place in the future. You could buy stuff, groceries, whatever. I haven't really thought through some of that because really in my mind, it's more of like a savings account. So when I want to, let's say when I want to take profits, I'll just swap my Zeph into ZSD, and then I'll hold my ZSD and I'll use that for whatever I need to pay for. So it's more about like having that savings and that stability. And so I think this kind of is game changer. Take it for what you will. Okay, so I've already talked about this, but it does kind of provide a little bit of extra detail in terms of how this exit liquidity is obsolete. So you don't really need to sell your Zeph on an exchange. What you can do is you essentially are just swapping it to ZSD. But really, when you swap it to ZSD, you're actually just locking your Zeph in a reserve, which backs your ZSD, and then you can wrap that ZSD and swap it to USDT. And so essentially, that ZSD is then locked on ETH, locking up the Zeph that backs it up, which reduces the circulating supply, and it actually increases like the supply shock, essentially, so that now Zeph will go a lot higher in value for various reasons. The one being that there's really just not a lot of supply, and of course people will want it because it's got the best APY, and yeah, there's a lot of moving parts here. I do want to get to this Discord question. Let's just do that. Okay, so Please elaborate the fact that as soon as you bridge, you lose your privacy. So actually, the ZEPH dev actually answered this question, which again, I think really shows how dedicated he is to being a part of the community, building out this platform, making sure that it's successful. And this question was actually directed at me for this video, but we have the privilege of being able to see what the Zeph dev would have answered. So he says here that Zephyr is a private chain, Ethereum is not. Wrap tokens are ERC20, so they have the same public-facing amounts of transactions, etc., as anyone. And yeah, I mean, he's basically just stating the fact here. So if you have a wallet on MetaMask, then everything you do, wrapping, unwrapping, will all be visible and it won't be private. And so, yeah, I mean, some amount of privacy is lost. But if you really care about privacy, it's not going to be a big deal because you can just make multiple MetaMasks. And there's no KYC for MetaMask. So you could just make as many wallets as you want and nobody's going to know. I mean, if you get doxxed on that wallet, then that could be a problem. But if you have multiple wallets and you split them up, then you could stay pretty anonymous. And you could always go back to privacy when you unwrap your Zeph. But people will know which wallets are unwrapping. So of course, you do lose a little bit of that. But I personally don't think that matters, actually. But yeah, if you really care about privacy, you actually kind of have to think this through so that you can keep your privacy as much as possible. But I think that's going to be very, very few people who are going to care that to that level. But maybe I could make a whole video about that. Again, the nuances of Zeph and the bridge are going to be so complicated. I could make 100 fucking videos. Okay. The second question, do you have any idea of which has the potential to be more profitable, Wrap, ZYS, or YZST? They're basically the same. Probably Wrap ZYS slightly because there'd probably be a very, very small fee that takes place. Let's see what the dev says. He says roughly equal, but I could imagine a slight edge. Okay, yeah. Only factor would be lending on top of the yield mechanism for something like YZST. Could be possible, but that would not be instituted by us. So yeah, they're not gonna, of course they're gonna make it, and then you can lend it and do all these things and make more money. You could probably do that with Wrap ZYS too, I think. But yeah, I think there'll probably be a little bit of fee because the way that YZSD will work is it's gonna like auto convert the Wrap Zeph ZYS into ZSD. It's a bit complicated, but then it will get paid out weekly, and there'll probably be a little bit of a fee there. Whereas with Wrap ZYS, there'll be no like swapping over to ZSD, and so there'll be no fee until you actually swap it back. And so because it's weekly, it'll like accrue fees a little bit higher, but they'll be exactly the same. Pretty much, just think about them as exactly the same. But yeah, I mean, this is kind of a question for a later time because YZSD is going to be, not made for a while, probably like 6 months or something. I think it's probably pretty complicated to do and very ingenious. So we'll want to make sure it works well. Okay. Last question concerning the over-collateralization. ZSD is backed by Zeph at 400%. In the situation last weekend where absolutely all the alts went down a shit ton, basically, is that going to be enough to protect the peg? And then what happens if, for whatever reason, fear, latency, etc., last weekend, arbitrage does not kick in. Last weekend, for some reason, the price of Zeph did not crash as much as most of the other alts, but what if it did? Right, so October 10th, right, USDE, the ETHNFI, depegged because of an exploit that was kind of taken because of the way that Binance kept the peg was not great. And in fact, this is actually kind of a good learning experience, to be honest, for Zeph and the Zeph team to like think about how the peg should work. It's actually pretty complicated, the answer here, because on Ethereum, the wrapped ZSD can depeg if somebody did the same thing, but it's like the same thing. It's just on the pool, it would depeg, but in the wallet, it wouldn't depeg, except for the fact that Zeph probably would go down a bunch if that did happen, and then the spot and the moving average would be off. So like if you went to go swap it, you would get the moving average rate, and then it wouldn't be worth $1. And so it is actually kind of complicated because it kind of would depeg if you think about it. If you try to swap it out, you wouldn't get a full dollar for it. And that also I think is a pretty good critique of like Zeph and the stable dollar is like if you want to swap your ZSD back to ZEPH, then it may not be exactly $1 if you don't know what you're doing, because the moving average and the spot are not the same. But what the way that I think about this is like the ZEPH dev could create a hook on the swap pool so that an exploiter actually would have no incentive to swap a huge amount, because the hook could cause it to not depeg essentially. So let's say I had like $100 million worth of ZSD, wrapped ZSD, and then I wanted to go ahead and kind of like depeg it. The hooks could be such that like if I tried to swap a bunch of wrapped ZSD to USDT and it was going to depeg, the hook could basically say like, look, it's not going to depeg, and instead of depegging, we'll keep the peg, but we're just going to fee the shit out of you, and we're going to take all your fees. So yeah, I mean, this is actually great. This exploit's pretty good because it basically now the Zeph team can like know that this is a potential exploit, and they can code in some hooks to kind of prevent it. And then let's just say that like potentially somebody did depeg the shit out of WrapZSD. I mean, I guess anything that's paired with it would kind of go down. But again, the Oracle system could be such a design that it just wouldn't depeg, because it would just say, oh no, the native is always one. And that's really kind of that's what Binance was wanting to do. They even announced they were going to do that. But now, like, and in the future, everybody knows, like, because of the way pools work and slippage works, you can depeg dollars, but they're not depegged in reality. Like USDC depegged a couple of years back, but it didn't depeg in reality, just at a specific pool on a specific platform. But like you could always just buy that for cheap where it depegged, and then just go to USDC and say, hey, I want my dollars, and they will always honor that. And same with Zephyr stablecoin. Yeah, maybe the spot will drop below the moving average, but they'll balance out, and then you can just swap it out for exactly $1, and then you can do what you want from there. So as long as like the oracles will always set it to $1, then I think that's really kind of the solution here, and the devs can kind of keep that in mind. His response was that it's not realistic. Hard facts is Zeph already experienced a 98% drawdown, and it was never close to 100% reserve ratio. Why? Because redeeming ZSD improves the network state in principle due to fees and the spot moving average price difference. You get slightly less ZSD back. When the reserve ratio drops, ZRS goes on sale effectively, so it allows for more backing to be added at a discount, and thus incentivize backing. To be completely fair, all systems do have their limits. Even USD and BTC have value because people believe it has value. If no one attributed value to Zephyr, then I suppose you could say it wouldn't work. And yeah, he had some questions here. So really, I think what the dev is saying is, if you look at how ZRS works, then if you just know how DGED works, then there isn't too much concern, because even if it dropped in 3 minutes, 89%, let's say, the moving average would take 24 hours to kind of move to that place if it stayed there, maybe more than 24 hours. So if the moving average starts to come down, so like the thing is, if the spot dropped immediately, you wouldn't want to swap your ZSD back. You'd literally have to wait, because you wouldn't get $1 worth. So it slows everybody down from panic selling. And then as the ZRS does come down, let's say, like if the spot price doesn't rocket back up, because it definitely would, but let's say it didn't, then ZRS, no, sorry, I misspoke. Then the moving average would slowly drift down towards the spot over 24 hours. And as it drifted down, the ZRS rate would go down with it, the real rate that you could swap to, and people would just buy, because ZRS is so valuable. That's just how DGED works. Is ZRS is so volatile that if it drops in value a lot, it can go up a ton, way faster than ZEPH can, because it's like a leveraged ZEPH. And the only way to get ZRS is by buying ZEPH. So if I'm buying ZEPH to get ZRS, then I'm protecting the ZEPH price, bringing that back up, which helps to collateralize everything. If I'm adding ZEPH to ZRS, it's collateralizing the stablecoin. Like literally, you just have to understand how DGED works for you to know that this actually isn't a concern. But it's a really good idea to kind of game theory out like what could happen. So I mean, it's generally a really good question, but you do just have to understand how DGED works. And then you'll understand like, oh, this is actually not a concern. Although I'll be honest with you, I bet we get like hundreds of these questions in the future, like thousands, because it's complicated. It's hard to understand. Maybe I'll just like make a whole video, like just one 10-minute video showing like how this can happen. I feel like probably what I need to do is just make 10-minute videos answering one question at a time because there's just so much complexity to these systems. But yeah, at any rate, I think that's pretty much all I have for this video. Yeah, subscribe if you want some more.